In this episode, we're talking about our top 5 tax tips going into year end.
Approaching December, Christmas time, time to get all the presents in order, but most importantly, time to worry
Tax
about
time.
worry about your taxes. So today we wanted to go over various tax tips that can help the viewers at home save money on their taxes.
Yeah, we've got, here's our top 5 tax tips heading into year end.
First tax tip is taking advantage of losses. So hopefully you don't have too many losses in your portfolio, but if you do, this can be something that you can use to essentially save some money on tax. Why don't you tell us a little bit more about this, Grant?
The advantage of tax loss selling is that you can sell, if you do have a position that's underwater right now, you can sell it off and you can use that loss against the capital gain, which you'd pay taxes on. So either you have an offsetting gain that you can use maybe even this year that you could take advantage of, or you can actually even carry that back up to 3 years. So 2014, 2015, 2016, and any of those years that you declared a capital gain, you can carry a loss from today back to against those gains. So you might actually get some money back from that you paid in the last 3 years. Or if you don't have any gains to write off from that period of time, you can carry it forward indefinitely, the tax loss. So tax loss selling can be a very effective way of avoiding paying taxes on capital gains.
When making investments at year end, there's different options available to you, and each of those options has various tax implications. So it's important to really understand what type of investment you might be getting into to protect yourself from paying more tax than you necessarily should.
Yeah, like heading into year end, there's a few investments that you may want to avoid or may want to hold off on purchasing into. In particular, if you're a person who buys like 1-year GICs, you may want to wait till January to purchase that 1-year GIC, simply because any interest that's earned on the months that you own it in this year, 2017, you're going to pay taxes on them sooner than you would if you just waited till January to purchase into it, because if you wait till January next year, any interest that is accrued in that account won't be taxed until the following year. If you want to just defer the taxes to a little bit later down the road, you could do that by holding off on making that purchase. Likewise with mutual funds, or some classes of mutual funds in any case, you just want to be careful when you're buying them at year end. Some of those mutual funds will incur a distribution, a taxable distribution at year end. You might not even have owned it for the whole year, but you're going to pay the full tax on the distribution, which will be coming out in the next month or so. So you just want to be really careful about that. If there's a fund that you're thinking about buying that's going to pay out a distribution, and even right now we're starting to figure out which of those funds are going to pay a distribution, you might just want to hold off until buying that fund until January, so you don't have to pay taxes on a distribution that you didn't really receive. So
yeah, exactly.
So you want to just be really careful with some of those investments, in particular like the interest-bearing investments like GICs and certain classes of mutual funds. And if you don't know which ones they are, we're always free to chat about it, obviously, so give us a call.
Third tax tip. You want to donate some money to a cause. Investments can be a more tax-efficient way than actually using cash. Talk a little bit more about that.
Yeah, I mean, especially going into the season of giving, the holidays, a lot of people will be giving lots of money. They'll be donating their cash. Something that you might want to consider is if you're sitting on like a stock position or an investment position that's sitting in a large capital gain, what you can do is you can donate the securities. So most charities will now have an investment account that they can accept those securities into, whether it's stocks or real estate units or things like that from a real estate trust. Anyway, you can donate those, and CRA lets you get around the capital gain, the capital gain tax that you would pay. So essentially, the capital gains tax is eliminated, and you still get the donation tax receipt from the amount that you donate. So whatever the market value is, or whatever the value is of the investment that you're donating, you're going to get a tax receipt for that amount and avoid the capital gains tax. So it could be a really effective way of donating. Great for the charity. Great for you from a tax perspective. So something to consider rather than just donating cash. You might be able to actually get a little bit further along for your charity by donating the securities.
So our fourth tax tip is for our business owners out there. Buying early can be a good thing. Talk a little bit about what you mean.
Yeah. So if you're a business owner right now, and especially one that like you might be buying equipment for your business or something along those lines, any sort of like capital expenditure like that, you might want to consider pushing that capital expenditure forward into this year versus waiting, because if you do it now, you're going to be able to write that off a little bit sooner. If you do it like in January, you might have to wait until the following year to claim your deduction for the capital expenditure. So if you want that money back sooner from any sort of refund position or to reduce your overall taxes, consider doing it now in the next couple months if you can. I mean, there's no point in stretching yourself to the point where it's stressful, but if you have the ability and the means to do it, you might want to consider making that purchase earlier on versus waiting.
I was going to say, if your business had a phenomenal year and it's a little up and down, that might be a year where you want to take advantage if you know you're going to have to purchase equipment.
Yeah, especially if you're sitting in a large tax position for this year because you've made so much money. That's a good problem to have, but you might want to keep some of that money for yourself.
So our fifth and final tax tip has to do with your tax-free savings account, or a TFSA. Talk a little bit more about this particular tip.
Yeah, so full disclosure on this one. This one isn't really about saving money on taxes per se, but it can be about maximizing your ability to invest within your tax-free savings account, which is tax efficient. So if you are considering making a withdrawal from your tax-free savings account for any sort of reason, any reason that you need the money for, you might want to do it before year end. And the reason being is you're allowed to recontribute into your tax-free savings account whatever you take out of it, but you can't do it until the following calendar year. So if you're thinking about making a purchase in, let's say, January, you might want to take that money out in December, and that way you'll be able to recontribute that amount back into your tax-free savings account the following year, or as soon as you're able to. Otherwise, you're going to have to wait till January of 2019 to be able to recontribute that amount. So just a little trick there. If you are considering withdrawing any money, better to do it sooner before year end, because even if you did it December 31st, we'll say as an example, you could recontribute that exact same amount back into it on January 1st or the next open day, January 2nd, in addition to the new contribution room that you get every year. So just a little bit of a tip with a tax-free savings account in order to maximize how much you can keep in your TFSA and earning tax-free growth.
Great. Well, that's it for our top 5 tax tips leading into year end. You have written a blog post actually on these 5 tax tips that goes into more detail. We'll include the link below for our viewers out there to take a deeper look.
Yeah, and if you have any questions, as always, feel free to get in touch with us. cgwfamilywealth.com. Check out the website, and all of our contact information is there. Ready?
Aim.
Fire.